Do you feel more bullish about the miners considering what we got out of China over the course of the last week and a half or so, or do you feel a little bit cautious? What's your read on what we got out of the two sessions, broadly speaking, what I'm asking?
Yeah, look, in terms of the miners, we quite like the lowest cost, highest quality operators. And a lot of that is around volumes and volumes continuing. There's been a bit of a pivot and sort of reflected in prices being strong and maybe weakening off, but a pivot to the automotive sector outside of your traditional fixed asset investment. So we remain constructive on the miners over on a medium-term horizon, particularly around volumes, continuing volumes into China and into Asia and the rest of the world. But those volumes driving cash flows, which, touch wood, continue to be paid to paid to investors as dividends. So that's sort of how our read is on it. In terms of banks, and now we'll talk about one of those coming up, but it is, some headwinds naturally there. What we don't necessarily see is outright growth. So we view equities as a growth asset class. Maybe there's, reasonable income coming through, but with rate increases we've seen over the last 18 months, there's a range of opportunities outside of equities for that sort of meaningful yield to come through. So a bit more constructive on the big miners in particular in the resources space.
Speaking of coming through, you're going to come through with some trade and fade right now. So let's start the game going. Okay, so let's start with some of your trades, shall we? Scentre Group. Now, we were speaking to the boss of Scentre Group just a couple of weeks ago. Now, they continue to, ramp the fact that, it's all about experiences. They've got massive occupancy. But how, if at all, how sensitive do you think they are if we were to see, recessionary or, quasi-recessionary conditions in Australia in terms of the consumption side? Are they going to be able to be resilient in the face of all of that?
We'd see certainly resilience in the experience or destination-based assets and really high quality assets that they have. So even a more recessionary environment to go out and foot traffic into a store, invariably you're likely to buy something. There is underpinning by non-discretionary anchors, and even their specialties are trading really well. The REITs and A-REITs have been a bit unloved, certainly over the last 12 and 18 months, and there may be another, perhaps in 6 months, another leg down in valuations. Coming through, though, is really solid rental income growth, and those rent increases with what's still high CPI, notwithstanding the financing cost or the squeeze coming, we like high quality experience-based retail, non-discretionary in nature, and Scentre Group stacks up well on that basis.